Today, I have two interesting investment ideas to share with you. The first one is the Chinese equity markets. If you look at the performance of the Chinese equity markets, over the past couple of months, the Chinese equity market has stumbled by more than 20% from its peak due to the escalating trade war tension between US and China and the continuation deleveraging campaign in China. However, in late July 2018, if you still remember that the Chinese government has announced a package of fiscal stimulus which aims to tackle the external uncertainties and to support the local economic growth in China. Therefore, although we do expect that the Chinese economic growth is likely to moderate this year, we don't foresee it to cause the Chinese economy to collapse. On the valuation front, both the Chinese onshore and offshore equity market, they are currently trading at a very attractive valuation level of close to -1 standard deviations. With that, they are expected to deliver 30% of annualized returns over the next couple of years. The second interesting investment idea is Malaysia's small cap sector. Back to the local front, investors might want to consider the local small cap sector as we see a higher upside potential from the local small to mid cap companies. At this juncture, if we look at the prospect for ringgit, we don't see any strong categories that could drive the ringgit higher, as the foreign investors are unlikely to pour into the Malaysian market due to the policy uncertainties. Therefore, the short to mid-term weakness in ringgit is likely to translate into a higher revenue and higher profitability to the local small to mid-cap companies, as the majority of them tend to source a big portion of their revenue overseas. The second thing, the zero-rated GST that happened recently, although it is not expected to improve the profitability of the local businesses, it is expected to improve the liquidity and working capitals for the local businesses, which tend to be more important for the small to mid-cap companies as they have less favorable credit facilities. On the valuation fronts, the Malaysia Small Cap Index is currently trading at a very attractive valuation level of close to -1 standard deviation. Also, if you look at the spread between the Malaysia big caps and also the Malaysia small caps, it is currently trading at a 5-year high level, which indicates that the small cap has a higher upside potential as compared to the big caps. To take advantage on the two investment ideas, you can click on the link below and read the full article at fundsupermart.com.